Alrighty, what's up, y'all? This is Uncle P, and this is our Sunday video. Cha-ching, cha-ching. Alright, so here's the deal. As you can see in the thumbnails, you've seen the numbers from last week. The beginning of the week was pretty rough, but it settled out, and so we did okay. And live session did very, very well with Miss Jenny in the live trading session. Let me tell you guys this. This is trouble, and there's trouble in the land. Right now, what's happening is that a lot of these, and I told my group this on Friday in a video into the group, but I told them there's trouble in the land because what's happening is that a lot of pairs, and it doesn't matter for the most part, whether you're trying to do supply and demand zones, support and resistance levels, and all these different things, you have to know about news events, because these news events are the things that's pushing these markets and pushing these currencies within their boundaries, but as we're currently seeing, outside of their boundaries. And if you're in my group, I keep telling you, if you're going to use simplicity, don't just use it for reversals. Use it to trade the trends as well. As you can see, the JPY pairs are nonstop. And I can't tell you when they're going to stop either. So if you're looking at trading those, you may get some short pullbacks, but long term just yet, it could continue to keep going. The reason why is because the JPY, they refuse to raise their interest rates. So if they're not going to raise their interest rates, investors are saying, why invest into you? If you're not going to give me an increase on my money and you're leaving your interest rates at zero, meaning that you're not going to pay me anything, then why should I ever even think about investing into your currency? And so that's why the JPY is dropping like a rock, and every other pair like the Swiss JPY, USD JPY, and all the others are going on a nonstop upward trajectory against it. Okay. Now, if they come out and say, hey, we're going to raise the interest rates by even a quarter point, on the next go round, then you'll see this thing possibly slow down. But realistically, for right now, I would see pullbacks, but not permanent reversals. So make sure that you're using the strategies that we teach in the group, the D1s and D15 strategies, stuff like that, and just ride that trend. The same thing happening with the CAD. The CAD did do a minor turnaround on Friday where it reversed where it should have. I thought it should have happened on Thursday, but instead it pretty much did the Friday flush where it flushed out price action on Friday, and it did a major reversal back to the upside. Will it sustain? I don't know. But the reason why they were so strong and the CAD was doing so well is because there's somebody watching the video, my other video. By the way, if you haven't seen my video that I did on the prop firms, please absolutely do not do a prop firm until you watch that video. It's going to be an eye opener for you. But let me finish this and then we'll drop on this news. So the point is that the CAD has been acting a fool because, they chose to raise their interest rates. And aggressively at that. And so the CAD had been on an upward rise over and over and over again. And so any pair that was against the CAD was getting hit upside the head. So you could have rolled the trend for CAD to the downside, meaning AUD CAD, Euro CAD, those kind of pairs, NZD CAD. You would look at your charts as of today, which is July 2nd, you'll see that they were in a downward drop because of what? Not price action, but fundamentals, meaning news events. So for those out there who think that the price action is king and that's all you need, okay, well, how are you going to explain when it keeps blowing right past every trade setup that you have? So having a little bit of knowledge of these things will go a long way, which, by the way, nobody has yet to contest or debate me on this particular thought process. I have always asked, if I was sitting in a room of bankers and investors and I told them that price action is all you need, what would they agree with me or would they disagree with me? And if I was to ask a room full of bankers and institutional investors, do you believe that fundamentals is top priority? What would you think they would say? And so therefore, those who are out there who think that they just know everything, you keep getting slammed and slaughtered because you refuse to acknowledge that you need both. Both are very important. But the point is that as I teach in my classes, we take action on the price. Price action. No, you take action on a price after you figure out what's going to make it move. Do you get what I'm saying? Okay. So fundamentals is very important. This is why I do this video on Sundays or Mondays, is because I want you guys to know here's the news events that could potentially mess up your trades before you jump in them. So let's go through it. On Sunday, which most people don't trade on Sundays, but if you do, just be aware that the manufacturing numbers are coming out for AUD. Now, here's the deal. These manufacturing numbers are normally never paid attention to. It wasn't that big of a deal. But because of the economies being weak right now, because of all the foolery that's going on around the world, the poor leadership, the wars, threats of wars, and the recessions, the inflation rates, and all these different things, a lot of different news events that normally was not even to be considered are now being considered even by me. Okay? So the manufacturing numbers shows the strength of an economy. And if it's showing weak numbers, then it can make that currency leap like a frog and hit your stops. So just be aware that the manufacturing is coming out on the AUD on Sunday. Then now this week, I would be very skeptical about trading the Swiss pairs. Swiss pairs has always been the pair that I like the least. Out of all the currency pairs, the Swiss will be the one. And the reason why is because now this week they're exposing that they have news events going on. But a lot of times they will make big moves in the market and you will have no clue as to why. You see what I'm saying? You wouldn't even know why, because they don't come out with news too often. But yet there may be some silent news that came out and the pair gets just shooting like fireworks. Okay? Check your charts. See if I'm telling a lie or not. They have a lot of moves that they make for no reason, okay? Well, they have a reason, they just can tell us. But this week they did schedule, and here's what they have. So the Swiss has the inflation rates coming out on Monday. They have their manufacturing numbers coming out on Monday. And if we skip down to Friday, they also come out with their unemployment numbers. So just be very, very careful. Now, if you do see setups, I'm not saying not to take the setups, but I am saying that you might want to take them in small doses. I wouldn't try to go hardcore in the paint, especially if you're trying to do a prop firm challenge. You don't want to blow up your account because you think you see a setup and then this thing goes right through it because of what? News events. Okay? Let's look at Wednesday. On Tuesday, AUD comes back around again with interest rates. Okay? Which is going to be a big deal depending on what they say. Okay? So make sure to pay attention to that. You have the Euro coming out on Wednesday with their services numbers. So you have goods and services. Goods and services. Always remember this. Goods and services. So with goods and services, service industry means how much work is coming in. Okay? So if the economy is strong, you have strong service numbers or job numbers. Okay? How many people is in the service industry doing well? Is the service industry standing up on its own 10 toes? Or are they missing a couple of toes because it's weak? So that is a sign of the strength of the country's economy in the service industry. Okay, so it's still important. Then you got the Feds coming out on Wednesday, who's going to be yakety-yakking, and what people are typically going to be looking for is signs that will reflect that the Feds are going to raise interest rates or still leave them alone. Okay, and last time they came out and did not raise interest rates, but that people are excited thinking, okay, it's over with. Many economists think, no, it was just a simple pause to give the banks and institutions that was collapsing a chance to catch up and catch a break for a moment and catch their breath before the next round of interest rate hikes come around. But we'll see. So if the Fed start talking anywhere, about these interest rates and making hints, you could see the market move, so just be careful of that. And then while we're talking about the USD, on Friday they're coming out with their non-farm payroll numbers, which means they're counting how many people are back at work who do not work at a farm, okay? Who don't work at a farm. Now, here's the funny thing about those numbers. Do I fully trust them all the time? No, I really don't. But right now it's going into election season, and you'll see that the stock market starts to rise again. Job numbers are looking good. Things that could have happened all along the way. All of a sudden they start looking real pretty. And it doesn't matter whether it's a Republican or Democrat. They all do the same thing here in the U.S. They start prettying up their numbers so that they can get reelected. In other words, they're just trying to get a job. They're trying to make sure they get rehired. That's all it is. They really don't care about people. They just worry about being rehired. Well, I can't say all of them don't care about people. Some do, but you get my point. You get my point. Your inflation numbers start coming down. The groceries bills start looking a little bit prettier for a couple of months until, you know, they don't need your vote no more. Then things go back to normal. So it is what it is. Okay. So just be aware of that. And then you got the Swiss, and I told you about them coming out with their unemployment numbers coming out on Friday. So it's going to be action-packed with news, but here's the other thing to keep in mind, that here in the U.S., it is going to be the 4th of July, so I don't expect a lot of volume personally, and it could still happen, so I'm not telling you not to trade, but on Sunday is typically slow anyway. Monday is going to be, in the stock market, it's going to be a half a day of trading, so therefore the volume of traders coming in from the banks and institutions on Monday may be lightweight, and then Tuesday here in the U.S. is the 4th of July, so there may be a lot of lightweight trading going in from Sunday through Tuesday. So volume may not even pick up until Wednesday anyway, so just be aware of that as well, okay? So that's the news and events for this week. If there's any questions, anything that you guys want me to cover, please leave a comment below, and I'll look into it and possibly do a video to help answer your questions and make everybody's journey a lot easier than what it needs to be, because it doesn't have to be stressful. Realistically, when you get to a point of trading right, you'll take fewer trades and it'll become very boring anyway. So again, let's go ahead and chitty chat, chatter chit. So you'll leave your comments below, and I'll be happy to do a video for you. Okay, bye.